हाय गाइस, वेलकम बैक। आज मेरे पास एक बहुत बढ़िया स्टॉक है और एक बिल्कुल नए सेगमेंट से है। तो जैसे मैंने आपको बोला है, हमेशा जब मैं किसी कंपनी के फंडामेंटल्स देखती हूँ तो मुझे एक चीज जरूर चाहिए होती है, वो है कैश फ्रॉम ऑपरेटिंग एक्टिविटी। द कंपनी हैज टू बी कैश रिच नो मैटर व्हाट, then it should have some, management changes or some management decisions which probably can help companies growth. That's the second point. And third point, the company has to have a technical setup, should look good, right? That's what I believe. The price should look really, really fantastic. So before I take you to the stock, I'm your host, Dr. Seema Jain, a SEBI registered research analyst, founder and chief mentor at stockpro. You can follow me on Twitter, YouTube, and Telegram. On Telegram, I'm super active. You can join me for live trading and absolutely free. My education is free, my research is free, my live trading along with you people is also free. So let's start today's video. And the company that I'm going to be talking about is from a dairy segment, right? And the company has very, very good fundamentals. And let me just take you to the slides that I have prepared for you. So the company here is Dodla Dairies, right? This quality play set to make a bigger splash. तो अभी तक जो इसने अपना एक फाउंडेशन बनाया है, बेसिक इट्स अ मिल्क कंपनी, इट्स अ डेयरी प्रोडक्ट कंपनी बट बेस्ड इन साउथ ऑफ इंडिया. Now they are ready for a bigger slice from this market, right? And as I've explained you, I'm Dr. Seema Jain, SEBI registered research analyst. You can get in touch with my team in whichever way you want. You can call them up and check about anything that you want to. So Dodla Dairies, or in simple terms, it is DDL, is among the few companies in the listed dairy space with a proven track record, right? And strong balance sheet and return ratios and strong management quality, and qualifies to be one of the stock to own, right? This is a stock you can keep in your portfolio for a long duration. So what are the highlights of this particular stock? To maintain industry outperformance by tapping new areas, enhancing direct distribution, ramping backward integration capabilities, double-digit margins to sustain, strong balance sheet and return ratios, valuations reasonable, and hence it is advised to investors to keep on adding small quantities in your portfolio. So Dodla Dairy's current market price is somewhere around 500 rupees. Market cap is about 3,000 crores. The second largest player among private dairies, with a significant presence in South India, is poised to continue outperforming the dairy industry. DDL is tapping both the tapping into new adjacent areas as well as inorganic route through acquisitions for strengthening its presence. So both methods it's using, organic as well as inorganic. Organic just by increasing its own reach by its own products, and inorganic by acquiring small other companies in the similar business. DDL has created a strong relationship with farmers by enhancing direct procurement. Milk is purchased from 1.3 lakh farmers, and by applying best practices such as direct payment to farmers' bank account, 81% of the farmers are paid directly. DDL also provides cattle feed to farmers and support them by facilitating cattle checks through its tie-up with a team of veterinarians. For DDL, the current inflationary environment is unlikely to have any material impact, as it has gone for a price hike of about 4% in January 2022, broadly commensurate with the industry. To pass on the increased procurement prices, with DDL gaining scale and all the milk virtually directly, it is well positioned to maintain double-digit margins on a sustainable basis. DDL is among the few companies in the listed dairy space with a proven track record, strong balance sheet and return ratios, and strong management quality. The stock has corrected. Why did I say the valuation was very good? Because the price that it made high was around 600 something, and currently it's available at 500, right? 630 or so. So almost like 27-28% correction has already happened in the stock, and hence it looks at a good valuation. If you have a look at it, they are making pasteurized pouch milk, right? Full cream, standardized, double tone, then UT8 milk, and then sterilized flavored milk in different flavors. They're making curd, they're making butter, ghee, buttermilk, lassi, ice creams, paneer, baked sweets like doda, doodh, peda, gulab jamun, whatever, right? So then comes, what is the product wise breakup? So if you have a look at it, value added products are 22% and fluid milk is about 78%. And geographical breakup, if you see, their presence is 94% in India and about 6% in Africa. Then let's have a look at the second largest private player in the South India gaining share and tapping new geographies. DDL has a strong presence of more than 23 years in Andhra Pradesh, Karnataka, Tamil Nadu, and Telangana. If outplaced the dairy industry with revenues growing 16% over years 2018 to 2022. Just have a look at it. The process capacity has increased almost like 20 metric ton or so. And milk procurement sales volumes have also been growing. They are really gaining a lot of market share by entering new geographies and also adopting the inorganic route of growth. DDL has steadily increased milk processing as well as procurement, reporting better than industry growth. On the organic front, DDL's strategy is to expand and market adjacent to its current area for operations so that it can grow in an effective manner. And inorganic ways, basically, they are doing a lot of acquisitions. So what are they also working on to enhance direct distribution, ramp up backward integration under OrgoFeed? So DDA plans to enhance direct distribution of milk to consumers and reduce its dependence on agents. DDL is ramping up Dodla Parlors, small store which company owned for franchisee operated and has almost doubled to a count of 550 compared to 290 year 2021. Also, DDL is supplying milk through premier offline retailers such as DMart and Reliance. DDL is also manufacturing cattle feed consisting of maize, rice. It sells cattle feed directly to farmer. Cattle feed price is adjusted against the milk procured. Isn't it a nice way, right? Farmers don't have to pay for the cattle feed. The price that they're going to get for the milk is getting adjusted against the cattle feed, which enables backward integration. Orga Feed currently has revenue of about 45 crores with profitability marginally better as compared to DDL. DDL is enhancing capacity from 2,000 tons per month to 10,000 tons and is directly announced a capex of 50 crores. The company plans to enhance Orga Feed revenue to 200 crores over 4 years. Now, to maintain double-digit gains, DDL has announced direct procurement of milk. Its procurement from village-level collection centers has increased from about 50% in year 18 to almost 90% currently. DDL is reducing operating cost, again a very important factor, and it is investing in modern technology and automation. DDL is also working on reducing water and electricity consumption as well as milk processing. These measures would enhance overall operation efficiency. DDL's EBITDA margins improved from 7% in 2018 to double digits in 21 and 22 till now. And just to conclude, DDL has strong balance sheet and return ratios. DDL has steadily reduced debt and for the past few years and became almost debt free. And currently DDL has cash and cash equivalents worth 300 crores. Given the cash nature of the dairy business, DDL has very low core working capital requirement. It has healthy return ratios and return on equity as well as return on capital employed, right? So let me take you to its balance sheet here, right? We're going to study the company's fundamental here. As I told you, it's about 3,000 crores. What you can see, the stock P is little higher, but that's okay. ROC is about 28%, ROE is about 21.7%, right? Again, a very important point. Company has reduced debt, company is almost debt free, companies produce a good CAGR, but company has delivered poor sales growth. That could be a concern, not major concern, as we just studied that they're taking a lot of measures about it. 2020 se dekhte hain what has happened to their sales. Sales have been continuously growing up, right? There is barely any effect of pandemic on this particular stock. And even the operating profit margins have been pretty much constant on quarter-on-quarter basis. Have a look at the sales year-on-year basis from 1182 in 2016. It has almost doubled to 2062 in current year. Also, if you see, the operating profit margins have been pretty much steady over a long period of time. And if you just see here that the reserves have continuously been growing, right? September 2021, they had 647 crores as their reserves, and the borrowing has been substantially reduced. Currently, it stands at 13 crore, right? And have a look at the cash from the operating activity. One of the point that really attracts me to a company is its cash from the operating activity. Have a look at it. It's been just maintaining huge amount of cash flow year on year basis. 2019, 118 crores, March 2020, 103 crores, March 2021, 217 crores, right? A very, very important point. And have a look at it. The debtors day is just one, right? Again, a very, very important point for us to know. And have a look at how are the FIs invested. Promoters have about 62.54%, and FIs have reduced a little bit of their stake by 2%, and whereas DII has increased their stake in the stock, right? So overall, the stock looks good to me. Let me take you to the technical structure. This is how it looks like, right? Now, how would I invest? Please hear me out clearly. In case you have a doubt, you can hear my video again. So the first point of entry is going to be wherever we are, right? 516 is where I'm going to take my first entry. In case the stock goes down to 440, I will again add some more quantity. If it further goes down to 400, I'll add up some more quantity, right? In case this stock starts going up from here only, right? My first point of entry is going to be 514. Then my next entry is going to be at 550, right? I will keep on accumulating. When it crosses 579, I'll add up some more quantity, and my target for sure is going to be 572 because it's taken 672. It has taken a lot of times, a lot of resistance. But let me give you my 1 year target is going to be at least 1,000 for this particular stock, right? Currently at 500, my target is 1,000. Means you can multiply your money to double in 1 year. No other instrument, no other stock will give you this kind of return. If you have noticed, I have given this particular stock, Arman Finances. I have given this on 21st June 2021. And I gave a buy at 637 and a target of 1200. And the time that I've given was 1 year, right? Have a look at it, Arman today. Arman Financials, and have a look at it. It made a high of 1176, right? So this is how our research is very, very rock solid and always bang on. You can really trust the research, keep accumulating, put small quantity, keep increasing, and keep making money along with stock. If you like my work, please like, share, and subscribe. And please share my video with your friends, families, and encourage them to learn about stock market. See you in the stock market wherever you want to follow me on Twitter, Telegram, or YouTube. I'll be very happy to hear from you. Write in comment box if you made money. Take care. See you.